Very good morning, everyone. Hope you all must be doing great. So let's start with the, uh, in fact, today is the last lecture for the workout batch. So let us start with the question number 10. It says, Mrs. Kashish is a resident individual age 62 years. Okay, senior citizen, is a qualified medical practitioner. PGBP income, professional income, correct? She runs her own clinic. Income and expenditure account of Mrs. Kashish for this year is as follows. So we have been provided with the income and expenditure account. Let us see, I believe same the total income would be required. You are required to compute the total income, okay, and the tax liability of Kashish for this year, assuming she is not opting for the provision of 115 BAC, okay. So again, we have to compute the total income and the tax liability as per the optional regime. If there is any difference in the default, I will also tell you if there would be any difference in default also. Now, first of all, we have to look at our P&L account or income and expenditure account, same thing. So we'll just see that if there is any expense which we think that it should not be allowed directly. So we'll look at it. So look at your debit side. It says salary to staff. So we are completely okay with this. Administrative expenses, quite okay. Rent of clinic. See, this is not a rent of house, it's a rent of clinic. So professional expense, okay. Conveyance expenses. See, if these conveyance expenses are related to business, then we are okay. But if it is personal, then no. Power and fuel, okay. We'll look at it this also. Power and fuel, if it is for business, then it's okay. Interest on housing loan, okay. This interest on housing loan, see, now it depends now on which house we have taken this loan. Say if it is building is used for our business or profession purpose, then we are okay with this interest. But if this this house is self-occupied, then obviously it will go in section 24B house property deduction. In case this is let out, again a house property deduction. So we will see that for which purpose this house is for. So interest on housing loan, okay. Interest on education loan for son. This we can say that interest on education loan of son. So everybody please tell me from which section you get this deduction. Interest on education loan, and this person is following optional regime. Today you will tell me where we can get this deduction, interest on education loan. Very good, Joseph. So we can get this in 80E, correct. So it's quite a personal expense, right? Darshni, good morning. Darshni, we have just started this question. So don't worry. I'm just reading my PL account, that's it. So interest on education loan is debited, which is a personal expense in fact. But yes, if we are following optional regime, then we get deduction under 80E. Correct. We get deduction under 80E. And for principal payment, we will not get this. Only for the interest payment, we will get this 80E. But in case we are following default regime, you understand in default regime, there is very few deductions. CCD2, CCH2, Agniveer scheme, and double J double A, that's it. In default regime, we will not get this. Amount paid to Scientific Research Association approved and notified under section 35. Okay. Look at it. This is section 35 that we are. Okay. Everybody please write with me. Everybody please write with me. Section 35. Scientific research expenses. These are business expenses. Section 35 is related to PGBP. And we know that there are two types of research. One is in-house research. What is an in-house research? That we do for our own business. It is business related for our own business. It can be revenue research also. It can be capital expenses also. And we know both are allowed under section 35. 100%. Capital expenses means if you have purchased a machine for a scientific research purpose, 100% deduction you can claim. Obviously, except land. On land, we never claim any deduction. So revenue and capital, both we can claim. This is in-house research. Correct. And it is also allowed in both regimes. So in-house research is allowed in both the regimes. And if we are donating something to a approved scientific research association, that is called outside research. We are not doing in our own business, but we are donating the money. Those who are conducting the research, let's say IITs, national laboratories, other approved institutions. So the day when we are donating it, on that day, that association, that institution must be approved. See, on the next day, if the exemption is withdrawn, it becomes unapproved, then we don't have to care about it. Don't worry about it. It's perfectly fine. You have to see that on this day, let's say today is 4th April. Let's say on 4th April, when you have made the donation, it was approved. That's it. You will get this deduction. On 5th April, let's say the approval is withdrawn, it becomes unapproved, doesn't matter. You will get the deduction. You have to see that on the day when you are giving the donation, that should be approved institution. That is called outside research. It is actually a donation. It is a contribution by the assessee. This is allowed only under optional regime. This is allowed only under optional regime, not under default. It is not allowed under default, we all know. And how much deduction we will get? 100% of amount contributed. Done. So we get 100% deduction of the amount contributed. So if we are following optional regime, we can debit this. If we are following default regime, we will not allow this. In-house research is allowed. Correct. I believe you have done this. Good. Now, it says amount paid to Scientific Research Association. We have paid certain amount to Scientific Research Association. Outside research, approved and notified under section 35. It's an approved institution. Correct. So tell me 1,50,000 should be allowed? The answer is yes, it should be allowed. Why? We are following optional regime. Had it been default regime, I would have not allowed it. So I believe everybody is clear. So it is perfectly debited. We don't have any issue with it. It is perfectly debited. So this one, the last one, net profit is our starting point. I'll start from here. For debit side, we have seen mostly all the expenses are allowed. Interest on education loan should not be allowed at all. Interest on housing loan, so it depends if it is related to house property or anything else, then we will not allow it. For business purpose, we will allow it. On the credit side, consultation fees. Consultation fees, she's a doctor, it's her professional income, so we are okay with it. Salary received from True Care Hospital Private Limited, 10,80,000. Salary received, this is the salary which she has received from True Care Hospitals Private Limited. There is some company from where we are getting salary. What type of income it is? What type of income it is? Out of 5 heads, what do you think? Out of 5 heads, what type of income it is? Salary. Correct, Zosa. Salary. Aditya, salary. She's working with some company, na? She's working with some company. She's getting income from salary. Correct, Aditya. Income from salary. So this is salary income. Perfect. And she has received this salary. Tell me, it is a computed salary or it is a gross salary. Computed means, should you give standard deduction from it or it is already done? Very good. It is a gross salary. Very good. It's a gross salary. Why? Because it is written salary. If this would have been written salary income, if this would have written salary income, then we should make an assumption that it is a computed salary. Already deduction has been allowed. But now it is given as salary received. So it means that this is the basic salary or other allowances that we have received it. So it's a gross salary, correct? So it's a salary received. So we have to give a standard deduction. And how much you will give? 50,000 or 75,000? 75,000 in case of default. But right now we are following optional. So 50,000 we will give. So 1080 minus 50, 1030 will become our salary income. Correct. Guys, you know it. So it seems like that this is day 10 of the workout batch. Good. You know it. By rental income from house property. Again, it will go in house property. Please tell me, by rental income from house property, is it a computed house property income or it is just the rent? Is it a GAV? If nothing is mentioned, I always say that 99% of the time you will not get expected rent, municipal value, fair rental value, limited to standard rent. Generally, you will get rental income. So it's a rental income. So it is again would be the rent only. So it would be GAV, right? GAV minus municipal taxes paid, NAV. So it's a gross amount, correct? And I'm getting an indication that this is a house property income. She is a house property income, and interest on housing loan should be related to this only. So I'm getting an indication over here. Let's see what the information is saying about it. Dividend income from foreign company. So we have received dividend income from foreign company, 60,000 rupees. Obviously it is IFOS income, correct? It is IFOS income. So we'll delete it from here. We'll delete it from here and then we will take it to IFOS, correct? So how much we will take it to IFOS? 60,000 or any other amount? 60,000 only. Why? Because it is a gross amount. It is not net of TDS, it's a gross amount. Agree? Delete from PGBP and take it from there. And guys, if I tell you, because on dividend, the rate of TDS is 10%, what do you think the TDS would have been deducted from here? I don't think so, because it's a foreign company, na? So foreign company is giving us dividend. So why they will be following the Indian companies, Indian Income Tax Act? So they might be giving this money. Whatever the TDS they have been deducted, we are not aware of it. So obviously 10% TDS, which we do in section 194A, sorry, 194, that TDS on dividend is 10%. It is for the Indian companies, right? It is not for the foreign companies. We cannot say that foreign companies, you should follow this law. It's a foreign company from where we are getting this. So I will not say that there is a TDS. I will not assume. There might be TDS, but this is as per their law. So we don't know about it. So we'll not consider that, correct? She is working part-time with True Care's Hospital Limited. Okay, now they have already given us that she is working part-time with True Care's Hospital Private Limited. It means salary income. Her salary details are as under: basic salary 85,000, transport allowance 5,000. Total it is 90,000. So 90,000 into 12, I believe 10 lakh 80,000. This is what we have there, na? Correct, 1080. Okay. Guys, please tell me about salary. Basic salary, we all know it's fully taxable. Personal allowances are also fully taxable, right? Personal allowances are for your own benefit. If it is official allowances, I told you in the salary chapter revision, if it's an official allowances means that the company is giving you such a money which is not ours, which is not employee money. They are just giving it to you so that you can incur office expenses. So that is called official allowances. Official allowances is not my income. Why? Because the money which I am getting, it's not for me. It's for the company only. If I am getting 10,000 per month, any official allowances, I will be spending this 10,000 for official purpose. So it's never my money. Correct. But transport allowances, what is transport? I told you that there is traveling allowance, there is conveyance allowance, there is transport allowance. Traveling and conveyance, it's for official purpose. Traveling is outside the city. Conveyance is within the city. Right now, I've told you before also, if you want, you can write it also somewhere. Traveling expenses means outside the city. Conveyance allowance means within the city. But they both are official. They both are official. It should not be taxed. Yes, if there is any saving which the employee is keeping in his pocket, then only that saving is taxable. Otherwise, if nothing is mentioned, please make it exempt because these are purely official allowances. Correct? Now, you know it also. If you want, you can write it somewhere. So these are official allowances, perfectly exempt. But then we have transport allowance. Transport allowance is a personal allowance. It's not official. It's a personal allowance. It should be taxable. Generally, why transport allowance is given to us? So that we can commute from our home to our office and then from office to back home. So this is our personal obligation. See, whenever we join a company, so it is our personal duty that we should reach there. So if the company is giving me transport allowance for that, so that is a purely personal allowances, and transport allowance is fully taxable under both the regimes. Personal allowances are generally taxable. So transport allowance is fully taxable only in case of physically handicapped, blind, deaf or dumb. In that case, transport allowance is exempt up till 3,200 per month under both the regimes. 3,200 per month it can be exempt only in that case. So here that she is getting transport allowance, it's a personal allowances and nothing is mentioned about the disability. So it is fully taxable. So transport allowance is a personal allowances and it is fully taxable. No doubt over here. Further during, so first point, they have given that she is receiving a salary income. Further, during previous year 24-25, her son has undergone a medical treatment in True Care Hospital free of cost. The hospital would have charged a sum of 1,60,000 for a similar treatment to unrelated patient. Is it a medical allowance or a medical facility? Her son got treated in the employer hospital. It's a medical facility, right? What is medical allowance? Medical allowance is that it's a part of, and what are allowances? Allowances are the part of salary which you receive every month. So let's say if somebody is receiving medical allowance, it means that the family member is hospitalized or not hospitalized, they will receive medical allowances. Allowances are part of salary, monetary form. They are taxable. However, perquisites are the benefits which you avail sometimes, So let's say company has given you a benefit of medical treatment facility, but the person has not availed that facility. Why? Because everybody was in good health this year. So we have not availed that facility. So if we have not availed it, it will not be our income. But once we avail that facility, it becomes our income. So that is called perquisites. So perquisites are the benefits. So it's a perquisite medical treatment facility. So her son got admitted into the hospital. He got medical treatment. Where? In the employer hospital itself. And the employer would have charged this amount from other person, but here we have not charged it. So will it become a perquisite? Now we have to see what is medical treatment perquisite says. Medical treatment perquisite says, please write it down. Perquisites. Medical treatment. Perquisites medical treatment. The below perquisites are exempt. I'm writing the list of the medical facilities, medical treatment facilities that is exempt. First is treatment in government hospital. So write in short that you can identify. So whenever the treatment is in government hospital, it is an exempt perquisite. Second, treatment in employer hospital, it is also perfectly exempt. Then treatment in other hospital, which is not government, which is not employer, means private hospital, other hospital, but the treatment is of notified diseases only, notified or prescribed diseases. So if it is in other hospital, which is approved by commissioner, which is an approved hospital, most of the hospitals are approved. So it is for notified disease, disease like cancer, tuberculosis, life-threatening diseases. So if the medical treatment facility is provided in 3 cases, this is exempt for the family. This is exempt for family. Only for family, not for any other person. And what does the term family means? Guys, generally whenever you are confused who comes in family, please use this. What does the term family means? And as per the definition of family under Income Tax Act, the family includes spouse and children. B, only dependent, parents, brother and sister. Spouse or children can be dependent, non-dependent, doesn't matter. But parents, brother and sister, if they are dependent. This is the meaning of family under Income Tax Act generally. So whenever you are confused, please apply this. It's a general definition. Spouse and children, whether dependent, non-dependent, and parents and brother, sister, if they are dependent, they are also the part of family. See now, if the father is not dependent, so if father is not dependent, they are not the part of the family as per this definition. So in that case, if treatment is done for the father, now he is not a part of the family, then it becomes taxable. Same way, I have written parents. I have not written in-law parents, right? So parents-in-law, father-in-law, mother-in-law, they are not the family members. So if the treatment is done even in government hospital, so please read them cumulative. Government hospital plus it should be for the family only. Employer hospital plus family only. So even if the treatment is done in the government hospital of someone that is not included in this definition, that will be taxable. So if the question says that in the employer hospital, mother-in-law is got treated, please make it taxable. Whatever the amount we charge from others, make it taxable. Understood or not? Have you done this? Come back. So please tell me here in this question, okay, you can write one more thing, guys. Note. Health insurance facility of above also exempt. So if the employer is giving you health insurance facility for the employee, obviously, or even for these family members who are written over here, health insurance is fully exempt. So it is one of the important point here. It comes in examination. So if the employee is receiving, so whenever it's a salary question, then health insurance which you receive from the employer for us and for these family members, it is also exempt. Correct? In this question, the treatment is of son. Son is part of the family, right? And where it was treated? It was treated in the employer hospital itself. So for employer hospital, exempt for the family, son is part of family. So in this case, it is purely an exempt perquisite. So in this case, Further, during 24-25, her son has undergone a medical treatment in True Care Hospital Private Limited free of cost. So we have given her a facility that the son can be admitted without any cost. The hospital would have charged a sum of this for a similar treatment to unrelated patients. Hospital charges this amount to unrelated patients. So whether we should make it taxable, the answer is no. It's a exempt perquisite. Why? It is employer hospital for family. It's an exempt perquisite. Please don't make this taxable. Now, next point. She owns a residential house. Okay. Which has been let out also, na? Which has been let out 240. She owns a residential house. The reconstruction of the house was started on 1st April 2024. It's 1st April 2024. It's previous year 24-25 only. And was completed on 30th 9 2024. It was completed also. It was started this year, it's completed this year. Okay. After reconstruction, ground floor of the house is self-occupied by her, while first floor has been rented out on one since 1/10/2023. So from October 23, we have let out this portion. Correct? So we have done a reconstruction, ground floor of first floor, ground floor we occupied, first floor we let out. And from when it is let out, from October onwards. So October, November, December, 1st October 2024. Correct. It is 1st October 2024. Correct, sir. So we have let out. Okay. So we have a self-occupied income also and a let out income also. Both the floors are of equal area. Okay. Both the floors are of equal area. That is 1/2, 1/2. The monthly rent is 40,000. Okay. 6 months it is let out. 40,000 into 6, 2,40,000. So I believe this is what we has credited over here, 240. Na? 40,000 is the rent, 40,000 for 6 months comes to 240. Then both the floors are of equal area. The monthly rent is this. The tenant also pays 3,000 per month as a power backup charges. He took a housing loan of 25 lakh for reconstruction on 1/4/2024. Interest on housing loan for the period April 24 to 30th September was 120, and for the period 110 till 31st March 25 is 1 lakh. During the year, she also paid a municipal taxes for 5,000 and okay. Guys, this particular point is purely for house property. So we have been given that she owns a residential house. The reconstruction of the house was started on 1st April. Everybody please write with me. So let us make the working note directly today. Let us understand this point. Solution number 10. And directly I'm making a working note. House property. Directly I'm making a working note here today. Now, the reconstruction of the house was started. Reconstruction started on 1st April 2024. Was completed on 30th 9/24. 6 months was the reconstruction period. After reconstruction, ground floor is self-occupied while the first floor has been let out. So from 1st October 94, now from 1st October, half of the portion, ground floor, is self-occupied and the remaining half is let out at rupees 40,000 per month. So I believe that if it is now let out from October onwards, 6 months it is let out. So rent which we have received is 2,40,000. Everybody doing it with me now? Correct? Now, they are saying both the floors are of equal area. Okay. The monthly rent is 40,000. Okay. The tenant also pays 3,000 as the power backup charges. This is the extra amount which the tenant is paying as the power backup charges. So this is rent of property to 240, and he is also paying rent of other facilities. The tenant is also paying rent of power backup. 3,000 into 12 or 6. From October onwards, he will pay now 18,000. He's also paying for the power backup. So whenever we receive money, let's say on rent, it's a revenue income. Whenever we receive this money, rent, etc. If it is on for building, it is house property income. And if it is for any other thing, so it should be, tell me guys, it should be which income? Let's say it's a rent of machine or rent of power backup, etc. It should be which income? Should I include this as an house property or it is something else? Rent of other things, rent of machine, etc. Anything. See, if we are into business of it, then PGBP. But if we are not into business of it, but still we have given it on rent, what do you think which income it is? Correct. It is IFOS income. So if the tenant is paying 3,000 rupees per month for other things, so it becomes our IFOS income. And don't worry, I'm not saying that completely it would be IFOS. See, if we are getting 3,000 from the tenant and we are actually spending also 3,000 rupees per month, 3,000 I'm getting from the tenant. See, since I'm getting it, it will become my IFOS income. And let's say I am also paying this 3,000 rupees to the maintenance department. Then my expenses is also 3,000. So it will be allowed also in IFOS. My IFOS income net would be zero only. Why? Because 3,000 per month I'm getting, 3,000 per month I'm spending also. So my net IFOS income at the end of the year will become zero only. Correct? But yes, we should show this in IFOS. Then the tenant also pays 3,000 per month. The tenant also pays 3,000 per month as the power backup charges. Now, she took a loan of 25 lakh for reconstruction on 1/4/2024. Now, loan is taken of rupees 25 lakh on 1st of April 24. Okay. 25 lakh for 1/4/2024 for reconstruction. Interest on housing loan for the period April till September, April 24 till September 24. April 24 till September 24, the interest was 120. Okay. This interest was 120. And from 1st October 24 till 31st March 25, it is 1 lakh. Correct. They have given this. During the year, she also paid municipal taxes for 5,000 and 5,000. Okay. I'll come to the municipal taxes after 2 minutes. Guys, this is the loan of 25 lakh rupees. We have taken on 1st April 24. Correct. 1st April 24. The day when we take the loan from the bank will start charging the interest. Correct. So April 24, we have taken the loan. Bank started calculating the interest. And the interest from April to till September 24 is 120. October 24 to March 25 is 1 lakh. I'll simply say, examiner, why you are confusing me? We need interest from April 24 to March 25. for this year, April 24 till March 25. So can I say that the total interest is 220? Unnecessarily, they are confusing us. For first 6 months they have given, next 6 months they have given. So what I need, I will say, boss, I need interest for previous year 24-25. So for first 6 months you are saying 120. For next 6 months you are saying 1 lakh. Sir, you should have told me now for entire 12 months it is 220. That's it. Why are you confusing me? For the entire interest rate is amount is 2,20,000. Everybody okay with it or not? Please write it. Please write it. Should I explain it again? Please tell me, should I explain it again? Okay, got it. Now, clear. Good. Now, last point. During the year, before I tell you the last point, let us calculate the house property income, because many things can be cleared from there itself. See, how is house property income computed? We have a fixed formula. One is called GAV minus municipal taxes. Then we have NAV. From NAV, we deduct standard deduction. We deduct standard deduction at rate of 30%. You can also call it 24A, otherwise not required, really. Minus interest on loan. This is called 24B. And we get our house property income. And we get our house property income. Can I say my half of the property is let out and half of the property is self-occupied? 1 by 2, 1 by 2, because they are 2 floors and they are saying they are equal area. 1 by 2, 1 by 2. Let me first finish my self-occupied because it's very easy. Self-occupied portion, we don't start with GAV, no municipal taxes, we start with NAV. And for self-occupied property, we take, if it is for the entire year, it is self-occupied. We have not let out to someone. So we will take NAV as nil. 24A, obviously 30% of nil will be 0. 24B, guys, if I would have been following default regime, I will not take 24B also. Because in default 24B, interest on borrowing on self-occupied property is not allowed. For let out, it is okay. For let out, there is no problem between optional and default. But for self-occupied, there is a little change. So in default, we don't get this deduction 0. So in default, can I say my self-occupied property is 0 value? Yes. So we will not get 24A, 30% of that. Obviously, it would be 0. But we will not get even the interest on borrowing. But in optional regime, we get this amount. But in optional regime, we can get this amount. Guys, please tell me up to any limit or there is a limit. In optional regime, interest on loan can be allowed. Tell me the limit, how much it is. It is up to any limit of interest or only a certain limit is there? Self-occupied, optional. For self-occupied, very good, very good. See, for let out, there is no limit. For let out, there is no limit. But for self-occupied, we have limit. And you now all know, sir, my limit is rupees 2 lakh, or sometimes it is 30,000. Rupees 2 lakh, or sometimes it is 30,000. Where is 2 lakh? 2 lakh is the limit if we are purchasing the house, sorry, we are taking the house for purchase of loan or for construction. For purchase and construction, it is 2 lakh. There is one more limit that it should be completed within 5 years. So that is not at all important. It never comes. So forget about that. But only please remember that 2 lakh rupees limit would be for purchase and construction. But if you take a loan for other purpose, like repairs, renovation, or reconstruction, not construction. For construction, it is 2 lakh. For reconstruction, renovation, repairs, it is 30,000. Guys, here they are using again using the word reconstruction. So reconstruction will fall in the category of repairs, renovation. 30,000 is the limit. Everybody agree? 30,000 is the limit for this. So we'll have a 30,000 limit for this, not 2 lakh. It is not for purchase construction. See, if you look at it, the reconstruction of the house started this. And we have taken a loan for reconstruction somewhere was written. So 30,000 is the limit. Now, tell me, how much is the interest allowed? So for this year, in this year, the total interest was 220. We have done that. The total interest was 220. So we understand 220 is the total interest. In this case, it would be for each, would be 1,10,000, 1,10,000. 1,10,000 here, 1,10,000 here. Correct? 2,20,000 is for the entire year. From April till September, from October till March, they have given it separately, but we combine it together. This is the year interest. And 1,10,000, 1,10,000 is for the each floor. But here we can get without any limit, 110. But here we will get only 30,000. All agree? So nil minus this minus this. So it would be negative 30,000 would be the house property income for this particular floor. Negative 30,000 is the house property income for this floor. I believe that you understood this. Now, for let out property, the GAV is the rent received. The GAV is the rent received. The rent received is 40,000 into 12 or 6. Why? October onwards. 2,40,000. We all know under house property, municipal taxes are allowed on payment basis. We all know that municipal taxes are allowed on payment basis. Interest on loan is allowed on due basis. In house property, municipal taxes are only allowed which are paid by the landlord, and that too if it is paid during the previous year. If it is paid, what is payment basis? You all know. Whether that this expense relate to any last year, whether this expense related to any future year does not matter. Payment basis means whatever you have paid during your previous year, whatever you have paid during this 365 days, whether it belongs to this year, whether it belongs to last year, whether it belongs to future year, does not matter. It will be allowed right here. Correct? This is called payment basis. So tell me, municipal taxes, they are saying during the year, during this year, I need how much is paid. That's it. To which year they relates does not matter. I need that how much it is paid. During the year, she also paid municipal taxes for the year 23-24 5,000 and 24-25 5,000. So 5,000 of last year, 5,000 of this year we have paid in this year only. So obviously total is 10,000 rupees. Everybody agree? So whatever is paid during the year, we will take it. So 10,000 we have paid it, although it belongs to different year, doesn't matter. So 10,000 would be allowed, but 10,000 is for the entire house. 10,000 is for the entire house. Municipal taxes is 5,000 for last year, 5,000 for this year, 10,000. And we'll give half. So 5,000 here, 5,000 there, I can't give because it's self-occupied. NAV is 0 over there. So as per the, so I will not write it over here. Everybody understood 5,000 rupees. Why I have taken 5,000? Because for the entire house it is 10,000. Entire house it is 10,000. For each floor 5. So NAV becomes 2,35,000. Standard deduction 30%. 70,500. 54,500. So house property income, correct Darshini, it comes to 24,500. Let me know if everybody has done that. Correct Aditya. Okay, come back. Understood? So although it was very simple, but they have given it in such a way that it seems to be tricky, but it was very simple. Other information. Okay. So in the first information, they have actually told me about their salary income. In the first information, they have told me regarding salary. In the second one, they have told me about house property. We have also calculated house property. In the third information, let us see the third information. They are saying conveyance expense include a sum of 48,000. There was some conveyance expense, na? This one. This amount includes 48,000. So let us see what they are talking about this 48,000. So they are saying conveyance expense include a sum of 48,000 incurred for the conveyance from house to True Care Hospital and vice versa in relation to her employment. Okay, guys, I'll ask you what it is. It is an allowable expense. It is not allowed. Is it for personal? What it is? What do you think is it? This is an allowance. Is your thoughts? Forget about everything. Your thoughts. What is this? Conveyance expenses includes 48,000 incurred for conveyance from house to True Care Private Limited and vice versa in relation to her employer. Okay. Okay. Everybody tell me, what are your thoughts? Very good. Very good. Correct. Correct. It's a personal expense. See, whenever we'll join any company, for example, we join some company, so we will, it's our responsibility now to reach that office daily on time. Let's say the timings are from 9 a.m. till 6 p.m., 9 a.m. in the morning. So it is our responsibility that we should reach over there. Right? So when we'll be going over there by any mode, we'll be spending some money. That is purely personal. It's not for business. First of all, we are doing it for job. But in job also, we don't get this expense allowed, right? It's a normal personal expense. And at 6 p.m., when our the office timing will be over, we will be coming it back to our home. So how we'll be coming it? Generally, we'll arrange ourselves. It's purely a personal expenses. So 48,000 is purely a personal expenses. So from there, please disallow it. It is not allowed. Correct. And where it will be allowed? Nowhere. It's a normal personal expenses. Whether it can be allowed from salary? No, we have not seen anything. There is no deduction from salary. Only the deduction which you get is standard deduction and an optional scheme, X on employment or entertainment allowance deduction. That's it. Coming back. Power and fuel expenses include. So there were some power and fuel expenses 144. Power and fuel is 144, right? This is debited. They are telling us about this. Power and fuel expenses include a sum of 10,000. Okay. That amount includes 10,000 rupees. So they are talking about that 10,000 rupees. Incurred for the generator fuel for the providing power backup to the tenant. Guys, I want you to tell me, you can tell me what it is, how we'll treat this. 10,000, how we'll treat this. First of all, it is debited in the penal account. How we'll treat it in PGBP or anywhere else if you want to treat, how I will treat this. Your thoughts. B point. You tell me what should I do? Okay. 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 Very, very good. Very good. Very good. See, now, first of all, it is not business related. It is not business related. These power and fuel out of whatever it is, 10,000 is not business related. So it is not a business expense. Disallow while computing your PGBP. Now, what type of expense it is? Actually, we are collecting some money from our tenant for power backup, and we are actually spending some money also. So it is an IFOS income, but whatever we are getting from our tenant, and this is an expense over it. This is an expense for it. So how much we were collecting from our tenant? 3,000 rupees, na? See, tenant was paying 3,000 rupees per month. 3,000 not into 12 guys. He came from October, right? So please be aware. 3,000 into 6, 18,000 is what we are getting, and 10,000 is what we are spending for it. IFO is a very simple section. It says that any expense which you are incurring to an IFOS income, you can subtract it. So 36 minus this 10,000. So this would be the remaining income. Correct. Very guys. Administrative expenses. Admin expenses include a sum of 10,000 paid as municipal taxes for our house. So 10,000 is the municipal taxes. Obviously, it's a house property expenses. And we have already taken 10,000 over here. Right now, we have already taken 10,000 over here. 5,000, 5,000 for these house. This I'll not take because self-occupied. Self-occupied start with nil. This I have already taken. So although it is 10,000 total. So they are saying that 10,000 is included in administrative expenses. So I will disallow it. It is not a PGBP expense. Disallow it. It is a house property expense. And we have already done the house property thing. 10,000 is for the total amount we paid. 5,000, 5,000 for each floor. We'll take it for first one. Second one, we will not take it because NAV is 0. Clinic equipment details. So obviously 10,000 will be added back. Clinic equipment details. They are asking about depreciation, I believe. Clinic equipments. Depreciation is 15%, right? On clinic equipments, these are plant and machinery, 15% depreciation rate. Opening WDV of the clinic equipment was 5 lakh. Fresh purchase was made on 28/8/2024 for 75,000, which was paid in cash. Guys, please tell me what you will do. Can you tell me the depreciation on it? Please tell me the depreciation amount. Please tell me the depreciation amount. Okay, Santosh. Santosh, you are studying now, huh? Seems like you are studying. Very good, Dashni. Very good, Aditya. See, any amount which is paid in cash more than 10,000 is not allowed. We already done this. So 75,000 we will not take. This 75, which is paid in cash, we will not take. It's a capital expenditure. We'll take only 5 lakh, and 5 lakh 15% would be 75,000. That's it. Very nice. Correct. She paid tuition fees of 40,000 for her granddaughter, which has been debited to her capital account. Okay, first of all, tell me where we will get this deduction. Tuition fees. Tuition fees, where we'll get this deduction for the granddaughter. Tuition fees deduction, where we get this. Very good. No deduction will be allowed. Tuition fees, although it is Darshni, actually it is 80C. 80C, it is to her tuition fees, but for children. Children can be own children, adopted or stepchildren. That's it, but not grandchildren. So tuition fees for granddaughter we will not get. It is 80C, but we will not get it over here because it is granddaughter. Had it been daughter, stepdaughter, adopted daughter, doesn't matter. But it should have been daughter. Granddaughter will not allow. So 80C will not get. Correct? And whether this 40,000 and if this 40,000 has been debited to P&L account, guys, again, confusing statement. See, such a confusing statement this question is making. Say 40,000 rupees has been debited in P&L account, then I would have added it back because it is not a business expense, it's a personal thing. Correct. But what are they saying? That 40,000 has been debited to her capital account. Please read it carefully. They have debited in the capital account. So if they have debited in their capital account, doesn't matter because we are not taking capital account, right? We are not taking capital account. So we are taking P&L account. So even if it is debited to capital account, hardly matters. I'm not taking that account. Correct? So you will not do anything out of it. You will not do because it is not debited to your P&L account. See, if they have debited to your P&L account because you are taking net profit as per P&L account. P&L is the base. So whatever is wrong in P&L account, you are concerned with that. But if anything is not wrong with the P&L account, something is wrong with other account. So why you are concerned with that? Because you are not taking anything of capital account, right? So unnecessarily they are confusing you. So don't add it back from anywhere because you have not taken it. So if it is capital account, any other account, I am least bothered. Correct? 40,000 I will not get anyways because it is for granddaughter. She availed a loan of 25 lakh from the bank for higher education of her son. She repaid principal 3 lakh and interest 156 during the previous year 24-25. So 3 lakh she repaid for the principal. See, education loan principal deduction will not get anywhere. Had it been a housing loan for construction for purchase, 80C we can get it for principal repayment. Education loan principal repayment will not get it. Only interest will get it 156 that we have already seen that it is 80E. Okay, good question. So let us start this question now. So we have salary income, we have house property income, we have PGBP. Do we have IFOS? Yes, dividend income, we have IFOS. We don't have capital gain, otherwise we have everything. Correct? Let us start with this. Although house property, we have already done it. Solution. Computation of PG, computation of total income and tax liability of Mrs. Kashish. Assessment year 25-26. Optional regime. Income under salary. I'll not make the separate working note because it is a very small calculation of 2 or 3 lines. What we are getting, whenever I told you in the salary chapter revision also, how you should do your salary question, whatever you are getting, make the list. You are getting basic salary, you are getting transport allowance, and there is a medical facility also. There is a medical facility also, correct? See, basic salary, transport allowance, and that's the medical facility. Only 3 things were there. Basic salary 85, transport 5,000. Medical facility is exempt. Why? It is family in the employer hospital. So it is exempt. Sorry. 10,80,000 minus standard deduction 50. 10,30,000 is the salary income. Done. Then income under house property. We have already done in working note number 1. I think 24,500 we got now, if you remember. Okay. Then we have PGBP. For PGBP, we will make working note number 2. Let us do PGBP on the next page. Working note number 2. How we do our PGBP? Remember the 4 steps. Net profit as per P&L account, expenses side, income side, information. Net profit as per P&L account or income and expenditure account, same thing. So here we have net profit as 55,34,000. Okay, look at the debit side. Salary to staff, we are okay. Admin expenses, rent of clinic, conveyance expenses. Car and fuel, there is a adjustment, but that we will see there. Interest on housing loan. So right now we know that this interest on housing loan is for house property. 2,20,000 rupees we have seen. 1,20,000 and 1 lakh. 220 we have seen. So first of all, it is not a PGBP. Interest on education loan, this is also not PGBP. These both are. One is house property, this is personal. So just add them, both of them. Add them 220 and 156. Interest on housing loan. 220. Interest on education loan. 156. Got it? Then amount paid to scientific research association. So I'm not right now I'm completely happy with it. No issues. Why? It's an optional regime. It is allowed. Had it been default regime, I would have added it back. But right now we are completely okay with it. So these are my debit side, my income side. Consultation fees, I'm okay. Salary is not a PGBP income. Rental income is not a PGBP income. Dividend is not. So it will go in salary. It will go in house property. It will go in your IFOS. So these are not PGBP, 1080, 20, 240, 60. I delete it. This is dividend. 240 is rent of property. 1080 is salary. So I'll subtract it. All good. Step number 3 we have done. Now look at the information. First information was salary, we have already taken. From PGBP we have deleted it, and in salary we have already computed. Second was house property, we have already computed. Then conveyance expense 48,000 will not be allowed. Add back par 10,000, add back. Administrative expenses 10,000, add back. Okay. Add 48,000 conveyance expense. It is of personal nature. 48,000 I'll add back. Power and fuel. 10,000 you will add back. Municipal taxes. 10,000 you will add back. Have you all done this till here? Very good. Then depreciation we have computed 75,000 less depreciation. 15% of 5 lakh, 75,000. If you want to write that on 78,000 paid in cash, that is not allowed, because that we have actually paid in cash. This 75 will not get. If you want, you can mention this. Tuition fees we have not taken in PGBP, so I'll not consider in PGBP. She availed a loan, that we have already added back, so we are perfectly okay with it. Correct. 156 was debited, we have added back, it's a personal expense, so we are okay with it. So I believe now you can compute your PGBP income. Tell me how much it is coming. Calculate this. Forty-five 23,000. Very good, Aditya Kishore Shagna keeper. I'm also getting this. 45 lakh 23,000. Take it in your PGBP. Then do we have IFOS also? Yes, we have some IFOS also, no? Dividend income we have IFOS. Any other IFOS also we have? Any other IFOS also we have? Power backup. 3,000 into 6, 18,000. Minus 10,000 is the fuel expenses. 28,000 we have IFS. Sorry, 8,000. 68,000. Correct, Harini. Power backup. Aditya, correct. 68,000. All good. Then let us see if we have left anything. Conveyance, power, fuel, admin expenses, clinic equipment. 80C we will not get. We will write now. First of all, GTI. 56, 45, 500. Correct. Shagna Aditya, correct. 56 lakh 45,500. Everybody, please understand, guys. Whenever this question is saying na, that we have paid in cash, so it means that we have paid in cash to a single party in a single day. That is assumed, right? So whenever we say that we have paid in cash, so it means that we have paid in a single day, correct? So it's not specifically, sometimes the question will tell you that it is a single day, single payment. So always assume that whenever they say that it is paid in cash, so we are assuming it is paid on a single day, correct? 56, 45, 500 less deduction under chapter 6 say. So 80C not allowed. Why? Granddaughter. It was granddaughter. 80C is not allowed. 80E interest on education loan. 156,000. This is my total income. And total income will compute the tax liability. As it is more than 54 lakh na, so we add surcharge also. We'll add surcharge also. I'll tell you more about surcharge today. Because in the first class I mentioned that there are some few topics which I could not complete in the first class, and in capital and also slum sale, so that I'll be taking it today. 54 lakh 89,500. Do we have any capital gain over here? 111A we don't have. 112A we don't have. Casual income we don't have. So it is all slab rates, correct? And this person is a senior citizen. So which slab rates you will apply? 0 to 3, 3 to 5 optional regime, 3 to 5, 5 to 10, 10 and above. Tax liability at slab rates. Is it coming as 14 lakh 56,850? First three, 1456,850. Correct, Aditya. Okay, good. Add surcharge at rate of 10%. Plus 4% cess. Fixed liability. rounded off. Correct, Aditya. Good. Everybody done? Very good. So these are the some of the total income questions. Almost 10 questions we have done in the last 3 4 days. So I'm believing that now you are quite comfortable with the total income questions also. So let us discuss the few topics which were left in the initial lectures. One, I would like to discuss about surcharge. You should good in surcharge. Then I'll be discussing a concept of slum sale. These are two topics which we have, which I was not able to cover in the initial chapters. So let us cover it. Shagna, Harini, Santosh, Raju sir. If you want, you can also drop after this because if you are comfortable with surcharge and slum sale, if you want, you can continue. If you want, it's as per your wish. You want to continue or you would like to drop from this meeting. It's up to you, right? Shagna, Harini, Raju sir, and Santosh. Okay, it's all up to you. Okay. Uh, Santosh, no. On TDS on salary, no. Please don't consider that some TDS was deducted from salary. Don't consider that, right? Because you don't know now that because salary TDS is not a fixed rate, it is different. So you cannot deduct TDS. Okay. Yuga, you also. If you want to continue, you can continue. Otherwise, if you want to drop, you can drop. Shagini, Harini, Yuga, and Santosh. Okay. Can I take a quick break? Let me take a quick break of 10 minutes and I'll start at 9. Wait, please, guys, please take a quick break of 10 minutes. We'll start at 9 a.m. And I'll be, after this break, so I'll be discussing surcharge and marginal relief. In fact, surcharge, mostly I'll be discussing marginal relief if that time permits. Then the slump sale. Okay, what I'll do first, I'll do the slump sale, then I'll come to the surcharge, right? After the break at 9 a.m. I believe that you guys are back. Okay, good. See, we let me talk about slum sale first. We have section 50B in capital gain, which is known as slump sale. Slump sale means that whenever you transfer your entire undertaking, which might have your machines, which might have your building, which might have your land, which might have your other assets also, and you transfer your entire undertaking, which might have some liabilities also, right? And you give it for a lump sum consideration. The money which you received, it is not for individually for each assets. You have land, you have building, other things, but for a lump sum consideration when you sell it, it is known as slump sale. So actually what happened is the origin was from why this is originated in India. There is a company which is known as Raymond's. So you must have heard, don't write it as of now. So there is a company which is known as Raymond's. And you all know that Raymond's is mostly in clothing. So they were in clothing, but they have at some point of time, they have started a business of cement also. But within few years of starting this division of cement division, they found that they are not comfortable with this business. So they dropped this business. So they sold this business. They sold this entire cement division. So cement division might be having its own factory. It might be having its own land. It might be having its own plant and machinery, other assets and liabilities also, which are only and only related to the cement division. And they sell this to a company for a lump sum consideration, for a lump sum consideration. Correct? So how you will get in your examination, you will get two units that assessee has unit 1, unit 2, and one of the unit he is selling, right? Or the entire undertaking he is selling. So you have to determine that what should be the capital gain in this case. So how the capital gain is generally computed? We know that generally we compute capital gain like this: selling price minus cost price, right? Selling price, we call it full value. Don't write it anything as of now. Just listen to this. We compute capital gain like full value of consideration minus cost of acquisition, cost of improvement, expenses on transfer. This is how we compute our capital gain, correct? And then we get our short-term or long-term capital gain. But here the issue is that full value of consideration, okay, we can get what it is, the lump sum amount. The lump sum amount we are getting, that is the selling price of this entire undertaking. Now the problem with these is these two: cost of acquisition, expenses on transfer. We are okay because if we are selling it for a lump sum consideration, there might be some expenses, so that we are okay with it. But the only issue is this cost of acquisition, cost of improvement. Why? Because generally, whenever we are doing any question of capital gain, only one of the asset was getting sold. Either gold is getting sold, or so we can take the cost of gold. If a land is getting sold, we can take the cost of the land. If a house is getting sold, we can take the cost of land or cost of improvement of land. But here there are many assets which are getting sold. So now the issue is that what should be the cost of those assets? So instead of cost of acquisition and cost of improvement, what they have done is 50B says, instead of this, we will take your net worth. How much is the net worth? What is net worth? Net worth is what is the worth of your assets right now? Right now, what is your worth and for how much you are selling? And guys, it's very easy. Let's say, for example, Let's say, for example, I have this asset, I have this asset, I have this asset, right? I have other assets also. I have other assets also. See, I have 2, 3, 4 assets. So what I'll see that what is the worth of these assets today. Let's say the worth of this asset is, I'll take the worth of the all the assets. I'll compute that is perfectly fine, but I'll be telling you. But let's say the worth of all these assets which I am having is rupees 70. Let's say the worth of all these assets which I have is 70 rupees. And guys, if I sell it at 90 rupees, so it means 20 rupees is the profit I made. Correct now. So 90 rupees is what? My selling price, full value of consideration. And the cost is the net worth of the asset. The worth of these assets was 70. So 20 rupees I made it a profit. That is a capital gain. If there is an expense on transfer 1 rupee, so 90 is my selling price, 70 is my worth, 1 rupees is my expenses. So I made 19 rupees. So this is how we should calculate it. Now you can write it that in slump sale, what we does is, how we compute it, full value of consideration. So this would be given to you in your question, that for how much we have sold it for, minus, instead of cost of acquisition, cost of improvement, we'll take the net worth of undertaking. Of which date? Obviously the date on which you are selling it, or 1 day before it, that is also okay. So we'll be taking the net worth of that undertaking on the day when you are selling it, or even 1 day before it, that's perfectly fine. 24 hours will not make that difference. So we'll be seeing the net worth. Now see, if whether we should index it, if it is pre-acquisition, pre-budget or post-budget. No. 50B from initial stage, there should be no indexation. Why? Because we does indexation. Why? Because we take cost of some previous period. We take your cost generally. So what was the concept of indexation was? Indexation was because you have incurred this cost long back. So this is the cost price of, let's say, 4 years back, 5 years back, 10 years back. So we used to index it. But here, the net worth is of today's value, the day on which you are selling it. So there is no point of indexation. So in 50B, we never does indexation. Even not because of this budget. No, before that also. So please remember, if it is slump sale, whether it is pre-budget, post-budget, whether it is 23rd July, before or after, doesn't matter. You will never do indexation. Correct? So no indexation of net worth, minus expenses on transfer. So this is actually my capital gain. So instead of COA, COI, we have taken net worth. Understood? So this is my capital gain. Now this capital gain can be long term also or short term also. It depends. It depends on the age of undertaking. Age of undertaking means that how old this undertaking is. So if it is more than 3 years, then long term, otherwise short term. More than 3 years. And guys, they have not made a change also, because most of the capital assets now, after 2 years, they are becoming long term. But here there was no change in this budget also. So please keep it 3 years. Pre-budget, post-budget doesn't matter, 3 years. So if this undertaking which you have selling, if you have started it some 3 years back, 4 years back, 5 years back, then long term. Otherwise, if you are selling this within 3 years, this undertaking is not very old, 1 year old, 2 years old, 1.5, 2.5, or maximum 3 years old also, then short term. Tell me, this is 50B as of now. Have you written this? Very good, Satish. Aditya, good. Now, good, Susan. Now, how we'll be computing? See, now there is no problem with full value of consideration. Full value of consideration would be given to us in the question. There is no problem with expenses on transfer. It will be also provided to us. So now the point is net worth. That how we'll be computing the net worth. So for net worth, we'll be taking the help of the balance sheet of this company. We'll be taking the help of balance sheet. So we'll be taking the help of balance sheet of this company and specifically for this undertaking. So if in this balance sheet we have the total of unit 1 also, unit 2 also, cement division also, cloth division also. So we are only concerned with cement division. Cement division means the undertaking which we are selling. So we should take the help of balance sheet and only related to that items which are particularly for this undertaking. Correct? So how we'll be taking the help of balance sheet, and balance sheet, you understand there is assets and liabilities. So net worth will be computed as follows. Total assets of undertaking minus outside liabilities. Minus outside liability. So this is your net worth. This is the net worth. Total assets minus outside liability. What is outside liability? See, whatever is shareholders fund, that is internal. So share capital, reserves and surplus, etc. That you should not exclude. Otherwise, outside liabilities like creditors, bills payable, whatever is the external people. Creditors, bills payable, bank loan, debentures, right? So these are actually the outsiders. So net worth is total assets minus outside liabilities. So outside liabilities are like creditors, loan, debentures, bills payable. Obviously, reserves and surplus is not outside liability. Shareholders fund is not an outside liability. Share capital is not an outside liability. Any kind of reserve is not an outside liability. Understood? Now, so net worth will become their cost. I believe that you have written it. Now see, let's say if any company sells their entire division, let's say for 100 crores, and for example their net worth is 60 crores, so 40 lakh is the capital gain. Correct? 40 lakh is the capital gain. Long term, short term depends upon when we have started this undertaking. If it is more than 3 years, long term, up to 3 years, short term. Okay, my point is, look at this net worth. So let's say we have sold this entire undertaking for 100 crores. Net worth is 60 crores. So my this is 40 crores would be my capital gain. Now, since this net worth is coming from my balance sheet, this net worth is coming from my balance sheet, so I can manipulate my balance sheet items also. So what some people can do is they can increase their net worth so that their profit should reduce. Correct? So what they will say, we are selling it for 100 crores. So because their net worth is coming from their balance sheet, and balance sheet's values can be manipulated by passing some manipulative entries. So instead of 60 crore, their net worth was 60 crore, but they manipulated the figures of the balance sheet and they are telling me 90 crores. And hence the capital gain is reduced to 10. From 40, it reduced to 10. So this is some manipulations they have done. And now 50B will say that if you have done some manipulations, you are trying to increase your net worth, so we will not consider it. We will consider your 60 lakh. How? That we will do. But we will consider your 60, will not consider your 90. Everybody, first of all, tell me, you don't have to write it, but tell me, have you understood it or not? Because since net worth is coming from our balance sheet items can be manipulated, right? How? It can be revalued. Let's say there is a land in your balance sheet. It is sitting at 10 lakh rupees. What I'll do? I'll increase my assets. If I increase my assets, my net worth will increase. I'll pass an accounting entry. Let's say my land is sitting at 10 lakh. I want to increase it by 16 to 16, let's say. So I'll increase my net worth. I'll pass my entry land debit to revaluation reserve, 6 lakh, 6 lakh. Everybody understood it or not? So this section says that if you would like to, you are increasing your assets. See, this is the balance sheet. Here it is land. Here is plant and machinery. Here are other things. So let's say my land is sitting at 10 lakh. And if I'll increase my land value, my net worth will increase. So how I'll do it? I'll pass an entry. Let's say I'm increasing from 10 to 12. 2 lakh I'm increasing. So I'll pass an entry land debit 2 lakh to revaluation reserve 2 lakh. So my land value will, originally it was 10, but it will increase to 2 lakh. So that when I'll be computing my net worth will come 2 lakh rupees extra. And if it is 2 lakh rupees extra, my cost is increased. My profit will come down. Or what I'll do, let's say there is a plant and machinery. For example, I have purchased it for 5 lakh. Some 2 years back, I have purchased it for 5 lakh. As now, we should show it as at a depreciated value, na? It should be depreciated. So it's not like that it's a machinery. So if it is bought 5 years back, 6 years back, 7 years back, why it is sitting in your balance sheet at 5 lakh only? Why you are not claiming depreciation? So what you will do? You will not claim depreciation so that your net worth could remain increase. So we'll say no. If these are any depreciable assets, please record them at the proper value. Please record them at the proper value, depreciated value. Don't record them original value. Why? Because these are depreciable assets. And if you are unnecessarily not charging depreciation so that your net worth can be increased, that is wrong. We will see your correct net worth. So we will see your correct value. Let's say there is any asset where the assessee has charged deduction 100% under section 35, 35AD or any of the section. They have charged 100% deduction of it. Let's say there is an asset of 5 lakh and they have charged 100% deduction on it. But still they are carrying it in their balance sheet at 5 lakh. Why they are carrying it? If you have charged 100% deduction, it should be carried at nil value, na? So why you are carrying at this value? So my point over here is that if a person will try to increase his net worth unnecessarily, manipulatively, we will take it back to its proper value. Correct? So note. Please write. Note. While calculating the net worth, any revaluation shall be ignored. So if you have done any revaluation, we will ignore it and we will nullify it. Shall be ignored and nullified. Nullified means that we will take it before revaluation. Or your depreciable assets shall be recorded at proper value. Proper value means after depreciation. Third, any deduction where 100% deduction is taken. If 100% deduction on any assets, it should be shown as nil. Why you are carrying it still? So if you have purchased a machine for 5 lakh and you have claimed 100% deduction, so you should show it as nil. Why you are carrying it at 5 lakh only? So these are something which we will do while computing our net worth. Also note an important point. The full value of consideration would be, see, this is the full value of consideration now. Somebody will try to manipulate this full value of consideration also. What they will say, see, the undertaking has the value of today. Let's say this is the undertaking. For example, this is the undertaking. And it has a value today 100 lakh. The market value is 100 lakh. And I'm telling to the assessing officer that I have sold it for 75 lakh. He will say no. Because the assets which you are giving has a today value of 100. How can you sell it for 75? You are actually telling lie. Correct. So this is what they have done in this section also. They will say, if you will say that you have sold it for 75 rupees, but its market value today is 80. So we'll take 80. Full value of consideration would be the market value of assets transferred or actual selling price, whichever is lower or whichever is higher, whichever is higher, because you will show your actual selling price as low, but the market value of the assets transferred is high. Correct? Now, have you done it? Everyone, have you done this? Now, look at this question. This is from your study material only. Page number 3.420. Look at this question. Mr. A is a proprietor of Akash Enterprises having 2 units. So this person has 2 units. He transferred on 1/4/2024. So during this year, April 24, he transferred. See, it is pre-budget although, but we are not concerned with indexation now because in 50B slum sale, there is no indexation even before pre-budget. So his unit 1 he has sold by way of slum sale for a total consideration of 25 lakh. So his actual selling price is 25 lakh. Everybody agree now? So he has sold unit 1 for 25 lakh. The fair market value of the capital assets of unit 1 was 30 lakh. See, now they are giving us that we have actual price is 25, but the fair market value is 30. That is what we will take as full value of consideration. What we will take? $25 or 30? 30, correct. We'll take 30, very good. Okay. Unit 1 was started in 2005 and 6. Unit 1 was started in 2005 and 6. Why they have given us to us that unit 1 is started in 2005 and 6? Long term. Because we are selling it in 2024 and it's more than 3 years old, so it's a long term. The expenses incurred for this transfers were 28,000 and his balance sheet on this date is as under. So this is the expenses on transfer, we will take it. So we have already received full value of consideration 30. Net worth we will calculate. Expenses on transfer were 28 that we have now. Let us calculate the net worth. How is net worth computed? See, asset side. Unit 1 assets, unit 2 assets, unit 3 total assets. Total of 12 lakh plus 20, 2 lakh, 14 lakh. This is the total figure. Guys, I do not need unit 2 assets. I don't need the total column also. I'm only interested in the net worth of unit 1. Unit 1, we are selling it. So what I'm interested is that land is sold for 12 lakh. Land is sold for 12 lakh. Machine 3 lakh. Land 12, machine 3, debtors 1, other assets 150. So the total assets is 750, 1750. These are the total 1750 total assets. Minus outside liabilities. Outside liabilities, see, what are the liabilities? Own capital is not an outside liability. Revaluation reserve is not an outside liability. Bank loan, yes. Bank loan is an outside liability. Trade creditors is the outside liabilities. All okay? But we are only concerned. Now this liabilities, they have not given the bifurcation for unit 1, unit 2. They have given the total. But still they have given the bifurcation here. Bank loan 70% for unit 1 and bank trade creditors 25% for unit 1. I need for unit 1. So 70% it becomes, so I'm concerned with 70% of this amount, 1,40,000 is the bank loan for unit 1. And trade creditors for unit 1 is 25%. 25% comes to 37,500. So my outside liability is 140 and 37,500. Everybody got it? So I have my total assets minus outside liabilities. Let us look at the information. Revaluation reserve is created by revising upward the value of the land of unit 1. So what they have done is they have created a revaluation reserve and they have manipulated with the value of the land. They have actually made it more. So they are saying revaluation reserve. Revaluation reserve is how much? 3 lakh for land on unit 1. We are selling unit 1. They have increased the value of 3 lakh of land. So tell me the correct value of the land should be 12 lakh or 9 lakh? 9 lakh. I will take before revaluation. Correct? I'll take before revaluation 9 lakh rupees. Now, no individual value of any asset is considered in the transfer deed. That's fine. No individual assets is taken. That means we are selling it as a lump sum consideration, slump sale. So this point is not relevant for me. Other assets of unit 1. Other assets of unit 1 includes patents. Where are other assets? 150. They're telling about this 150. Other assets of unit 1 include patents acquired on 1/7/2022. 1/7/2022. Which year? Previous year 22-23. There are some patents which are acquired for 50,000 on which no depreciation has been charged till now. Guys, it's a depreciable asset, intangible assets. Yes, patent is depreciated 25%. And since you have purchased it in previous year 22-23, very good, Aditya. 25% is the rate of depreciation also on intangible assets. Since you have purchased in previous year 22-23, you should have charged depreciation in this year. And you should have charged depreciation in previous year 23-24 also, this year also. And then the next year you are selling it. Previous year 24-25 you are selling it. Okay. If you don't charge depreciation this year, that is fine. But at least these 2 years there should be depreciation, na? How much? 25%. On what amount? 50,000 rupees. So they are saying other assets include 50,000. See, other assets total is 150. So what I'll do is I am only concerned with 50,000. I am only concerned with 50,000. So other assets I will make 2 parts. 50 and the other is 1 lakh. I believe 1 lakh you understood. Because total was 150. Total was 150. So what I'll do is I'll make other assets 1 lakh and patents 50,000. So these are the patents. With other assets, I have no issues. I have issue only with patents. Can you tell me the correct value of the patents, guys? He has never charged depreciation on patents. Patents were 50,000. Can you tell me the correct value of the patents? Just on your calculator, you can do it in just 10 seconds. Can you tell me the correct value of the patents, anyone? I think you can calculate. Even the way you feel like you can calculate that way. So it's not necessary that you should calculate it by my way. 50,000 is the patents. We have purchased it on 1/7/2022. And this year we are doing a slump sale 24-25. So 2 years depreciation we have not charged. Tell me the depreciation for the first year. Tell me the depreciation for this year. 50,000 into 15%. So sorry, 25%. 12,500. 12,500, got it? And after 1 year, the written down value would be 37,500. Second year depreciation is on written down value. 9375. After this, it would be 28,125. This is the value after 2 years depreciation. This is the value after 2 years depreciation. Those have got it. This is the value. You will charge on WDV method. You can't charge SLM method, obviously. So WDV method, 28,125 is the value. So this would be, see, other assets include 50,000 patents, 1 lakh other assets. 1 lakh other assets, I have no issues, but I have issues with this. So I will take it, not 50,000, 28,125. Okay. The value of the machinery represents the written down value as per the income tax act. So value of the machinery has no problem. It shows the written down value. So it means value of the machinery, we were computing the depreciation correctly. Now, compute the capital gain for the assessment year. Now, what we will do? We will do the slump sale. Full value of consideration, how much you will say? 25 or 30? 30. So full value of consideration would be 30. Minus cost of acquisition is net worth. How much is the net worth now? Just see unit 1, total assets. So I should take 12 lakh or 9 lakh? 9. 9 plus 3. 9 lakh plus 3 lakh. Plus debtors 1 lakh. Plus other assets 28,125. Plus 1 lakh. Are you getting the total of the assets? 14 lakh 28,125. Minus outside liabilities. Minus outside liability is bank loan 140, trade creditors 37,500. 129,0625. 12 lakh 50 or 90. Okay. 1428,125 minus 1,40,000. Correct. 12,50,625. 12,50,625. Everybody understood it or not? 12,50,625. Correct. So what I'll do? Net worth is 12 lakh. Full value of consideration is 30 lakh. Net worth is 12,50,625. And there is some expenses on transfer also. 28,000. Correct. Long-term capital gain 17,21,375. Everybody understood? 17,21,375. So these kind of questions are important for you. So if we look at it, 17,21,375, 17,21,375 long-term capital gain, and they have given us a note to compute the net worth. And they have also given us the note to compute the correct value of the patents. That is the depreciation which we are doing. So this is how the slump sale question should be done. It is an important topic, slump sale. I believe everybody understood this. Now, let me come to the topic of surcharge. The method is same. Either you are doing optional regime or you are doing default regime. The method is same. But in default regime, if your total income is first level is if the total income is more than 50 lakh and up till rupees 1 crore, 100 lakh, then the rate of surcharge is 10%. Second level is if it is more than 1 crore to 200 lakh, 2 crores, the rate is 15%. Third, if it is more than 2 crores, 200 lakhs, excluding triple one A, 112A, 112 dividend income, then the rate of surcharge is 25%. So if it is more than 50 lakh to 1 crore first level, 10%. If the assessee is more rich, then more than 1 crore to 2 crores, 15%. If the assessee is ultra rich, he is earning more than 2 crores. Excluding these, then 25%. Note, surcharge on triple one A, 112A, 112 dividend income cannot be more than 15%. Second note, if assessee does not fall in any level, then the surcharge is 15% for all. Please write it. Let me know once done. Good. Okay. Now please understand, guys. Surcharge is not applicable if the total income is up till 50 lakh, 50. If it is up till 50 lakh total income, surcharge would not be applicable. Surcharge will come if the total income of the assessee is more than 50 lakh. So if the assessee is rich, then only we will take some extra tax from them. See, what is surcharge? Surcharge is extra tax. So only the rich people can afford to pay these taxes. So we'll not take the surcharge from common person. So anybody who is earning up till 50 lakh, he is not supposed to pay surcharge. But as and when you go above 50, then you have to pay surcharge also. So the people who are sitting in 50 lakh to 1 crore level, they are rich. They have to pay 10% surcharge. And 10% is on taxes. It's not on income. 10% on taxes. Second, if the person is more rich, here the person was decently rich, but here the person is more rich. Now, and if he is earning more than 1 crore, more than 100 lakh means, and up to 2 crores, then 15% is the surcharge rate. The surcharge rate will increase. Why? Because now this person has the more capacity to pay. And if the total income is more than 2 crores, but guys, here there is a condition also in third one. If your total income is more than 2 crores, excluding these income, then surcharge rate is 25%. Now, why they have said excluding these income? Because on these income, what is triple one A? Triple one A is equity shares, equity oriented units. 112A, equity shares, equity oriented units, long term. This is short term, this is long term. What is 112? Other long term and dividend income. If excluding these income, just from your total income, let's say in your question, you will get a person has 3 crore rupees of total income. Can we say that this person will come in point number 3? No. First you need to do is don't look at 3 crores. So first you need to do is let's just look at that do I have any income from 111A, 112A, 112 dividend income? Just exclude that. After excluding that, now tell me, is it more than 2 crores or not? So if it is more than 2 crores, then it comes in third level. Otherwise, this person will not come in third level also. I'll give you the example. Why? Because on these income, the surcharge rate can be maximum 15%. Can be maximum 15%. Correct, Harini, no problem. Right. The surcharge rate cannot be more than 15%. Actually, guys, what happened is few years back, the surcharge rate was maximum 15% only. Few years back, the surcharge rate was maximum 15% only. And rich people were paying this also. Although, see, to pay tax, everybody don't want to pay tax, but still, they were paying up till 15%. 10% was also there. If they are above 50 lakh to 1 crore and above 1 crore, they are used to 15%. So they were a little bit okay paying 15%. They said, okay, we can pay 15%. But what happens is, Mrs. Nirmala Sitharaman increased the rate. From 15%, she took 25%. And even in optional regime, she took 37%, up till 37%. Now, these people have a major problem. So when this rate was increased by Nirmala Sitharaman, then the stock market started to fall. The stock market started to fall. And people just checked that why the stock market is falling. It was falling due to the surcharge rate, due to the increase in the surcharge rate. So the people, mainly these rich people, have invested a lot of money in the stock market. So they are of the opinion that it is a very, very high surcharge rate for us. So we don't think that we will be able to continue with the stock market game. But it is important for the economy to run the stock market also. So in that case, so what she did is, Nirmala Sitharaman made changes. She said, okay, we are giving the relaxation to the stock market players. If you have income from 111A, guys, tell me, what is 111A? It's a stock market income. Yes, it is equity shares, short term. What is 112A? Equity shares, long term. And dividend income. Dividend income is also stock market income. So she made the changes on 111A, 112A and dividend income in that year. That okay, previously we were taking maximum surcharge 15. See, 10% also we were taking for those people who are 50 to 1 crore. But for more than 1 crore, we are taking 15%. Are you ready to pay 15%? They said, okay, sir, maximum, ma'am, we can pay 15%. Then she said, okay, on 111A, 112A and dividend income, she made maximum 15% rate. She will say, if you are falling between 50 lakh to 1 crore, then pay 10%. If it is more, pay 15% and enjoy. You don't have to pay 25%. You don't have to pay 37%. Next year, she added this also, 112. What is 112? Other long term. So today, it is 111A, 112A, 112 also, and dividend. Casual income is not there, and dividend income, mainly stock market income. So if a person has a stock market income, he cannot pay. We will not expect him to pay. See, either he can pay 10%, 10% is fine, but maximum which he can pay is 15%. Understood? Now, write an example. Mr. X during previous year 24-25. It's a case of X for the previous year 24-25. His PGBP income is 25 lakh. His capital gains is 26 lakh, which includes 111A 20 lakh, 112A 4 lakh. 111 is equity shares, 112 is equity shares long term. It is 4 lakh. Other could be other short term. I have not mentioned. See, it is 20. So if somebody will ask me, sir, why this is not equal to 20, we can have other short term also, na? So total income we have is make it 36. Make it 36. 61 lakh. Correct. Total income we have is 61 lakh. Now, how much tax we have to pay? You understand? First of all, you will compute the tax on income. So first we will see, do we have any special income? Yes, we have any special income. So we have on 111A, it is 20 lakh. From 111A, then we have 112. 112 we don't have. 112A we have. On 112A, it is 4 lakh. Then casual income we don't have. And the remaining income is how much? $37 lakh. Correct, Shagna. 37 lakh. Tax on 20 lakh, 112A, remaining income 37 lakh. Okay, let us compute. On 111A, we have a tax rate of 20% now post budget. As if it is pre-budget, 15%, post-budget, 20%. 4 lakh is the tax. 112A minus 1.25 lakh flat exemption. Pre-budget, post-budget, flat exemption 1.25. 4 lakh. So 2,75,000. Post-budget, it is 12.5. Pre-budget, it was 10%. So it is 12.5. 34,375. Everybody is okay with this? Now, remaining income 37 lakh slab rates. So please apply slab rates, default risk, slab rate 0 to 3, 3 to 4, 4 to 7, 7 to 10, 10 to 12, and so on. So on 37 lakh, I believe it is 8 lakh. On 37 lakh, slab rates is 8 lakh. Now the total tax comes to 4 lakh plus 34,375 plus 8 lakh. 12 lakh 34,375. Everybody tell me, first of all, have you done till here? whether my calculations are correct or not. Tell me whether you have done till here or not. Calculations correct now. Now, now, the assessee's income is 61 lakh, more than 50. Guys, just see. Right now he's in which level? Right now he's in which level? He's in the first level. Right? He's in the first level. It is more than 50 and up till 1 crore. He's in the first level 10%. Guys, in the first level, we just see. In the first level, we just see your total income. See, I have written 111A, 112A, 112 here. In the third level, I have written. Why? Because up till 15%, these stock market players have no problem. So in first level and second level, they have no problem literally. So here we are seeing only the total income. If it is 50 lakh to 1 crore, first level, more than 1 crore to 2 crores, second level, that's it. So right now we are seeing just total income and he is falling under the first level. The tax would be 10%, simple. Surcharge would be 10% on this amount. This is tax plus surcharge. Now at a rate of 4% cess. After cess, we will get 14,12,125. This is tax liability and you can round off. This one, 8 lakh. 37 lakh, I got 8 lakh, Shagna. Anybody? Aditya also get 37. Default regime, na? Let me check. Let me check on 37 lakh. See, 0 to 3 lakh. First 3 lakh, it is nil. 3 to then 7. Next 4 lakh. At a rate of 5%, 20,000. Then next 7 to 10. 7 to 10. Default regime, it is 8 lakh. Next 7 to 10, 3 lakh at a rate of 10%, 30,000. Then next 10 to 12, next 2 lakh at a rate of 15%, it would be 30,000 again. Next 3 lakh at a rate of 20%, it is 60,000. And remaining above 15, it is 30%. Guys, it is default regime, right? It is default regime. Now, I believe Now, everybody, please look at this. Everybody, please look at this. Guys, whenever you have to compute tax by default regime and your total income is more than 15 lakh, please don't waste your time over here. In examination, please don't waste your time over here. Why, you all know? See, 3 plus 4 plus 3 plus 2 plus 3. This is 15 lakh, right? This is 15 lakh income. This is first 15 lakh income, right? This is first 15 and this is remaining above 15. Agree? This is first 15. This is remaining 15. Let's say, for example, I have 37 lakh. For example, I have 37 lakh. So first 15 will go here, and over and above 15, let's say it is 37. 37 minus 15. 37 minus 15. 22 lakh is over and above. Correct? So I can divide my 37 into two parts, first 15 and remaining. Got it? And now we know in default regime, on first 15, how much is the tax? Just add it and tell me how much is the tax. Everybody tell me how much is the tax on first 15. 140, na? 1.4 lakh. Correct? And on this, we have directly 30%. We have directly 30%, right? So on 22, we have 30%, 6.6 lakh. So 6.6 plus 1.4 comes to 8 lakh rupees. Got it? Now, what you need to do is, it's a very easy thing, guys. Please don't show all these things to the examiner because it is very primary. Everybody know how to calculate the slab rates. But the problem is sometimes it becomes time consuming. Please save your time in default regime. See, I believe most of you must be knowing it. It's a simple shortcut. What you can do is, for example, just listen to me, then I'll ask you to do. And it is just a 10 seconds job. It is just a 10 seconds job. Please see. Let's say if I tell you that compute your tax on 32 lakh, default regime. Correct? So what you should do is, you should first 15, keep it aside. In excess of 15, more than 15, 17 lakh, keep it other side. Understood? Understood this much? Yes or no? I need your confirmation. If you have any income which is more than 15 lakh and you have to apply default tax rate on this, first 15, just pull it out and the remaining is 17. Now on 17, apply 30% rate, 5 lakh 10,000. Correct? And on 15 lakh, you know, already it is 1.4 lakh. Just 510 plus 1.4 lakh, you will get 6 lakh 50,000. Understood? I'm again repeating. Now you will not do with your pen or pencil. You will do with the help of calculator only. For example, don't write it anything. For example, you have to compute tax on 46 lakh. Pick up your calculator. Everybody pick up your calculator. Now, on 46, what we need to do is first 15 and remaining amount. We need the remaining amount. So what you should do is just type 46. Just type 46. Correct? 46 would be there in your calculator. Minus 15. Minus 15. You will get 31. Minus 15 equal to 31. Can you see 31 in your calculator right now? 31. So I got this amount. 31. Now apply 30% rate into 30%. Into 30%. You get 9.3. So what you got is 9.3. Just add 1.4 here also. 9.3 plus 1.4, you will get 10.7. So 10.7 is the tax at the default regime. Any income which is more than 15 lakh. Once more. Clear the screen. Just clear the screen. I will say 72. Now, follow my steps. I will say 72. Write 72 in your, just 72. 72 you are seeing in your calculator. Minus 15, just minus 1, 5. Not equal to, also not required. Minus 1, 5. Right now you are seeing 15 in your calculator, correct? Into 30%. Whenever you will press into, it will always be after subtraction. Into, see 57. Whenever you press into, multiply, 57 would be there. It has already subtracted it. Into 30%. 30%. 17.1 plus 1.4. 18.5. Got it? Everybody got this? Yes or no? Tell me. I think most of you must be knowing it also, na? 18.5. Okay. Can you guys tell me what is the tax on 66 lakh in 10 seconds? Tell me the tax on 66 lakh, default regime in 10 seconds. I got it. Very good. 16.7. Very good. 16.7. Are you all getting this? Anybody? Should I explain it again? If anybody required, should I explain it again, or everybody got it? Okay, now come back. Now come back. So surcharge 10% you applied, tax plus surcharge 4% rounded off this much. Another example. Another example. Let's say PGBP income is 40 lakh. Capital gain is 100 lakh. 111A 10 lakh. 112A 5 lakh. 112 is 60 lakh. Let's say total income is 140. The total income is 140, let's say. Correct, write it. The total income is 140. Now you know. I've already told you in the first lecture. First, what you should start with 111A. On 111A at a rate of 20%. How much was 111A? 10 lakh. At a rate of 20%. Let me not write it. 112. Then it should be 112. Long-term capital gain. How much is long-term capital gain? 60 lakh. Then 112A, 5 lakh. See, we have special income 111A, equity share short term, 112 long term, other long term, 112A, long term equity shares, equity oriented units. Then we have casual income we don't have. Then we will get the remaining income. Just tell me the balancing figure. Just tell me the balancing figure, remaining income. Everybody, please tell me. 140 minus this. 140 minus this. Is it 65 lakh? Everybody got it? Is it 65 lakh now? Now, correct, Kishore. Now, calculate your taxes. 10 lakh, 20% is 2 lakh. 60 lakh, 12.5%. 7.5 lakh. This is 112A. 5 lakh, first subtract 1,25,000 from it. Then apply 12.5%. $46,875. Am I correct or not? Am Am I correct or not? 65 lakh 10 seconds. 65 lakh 10 seconds. How much? Tell me the answer in 10 seconds. Very good. 16.4. Add it. Add it. 2 lakh, 7.5 lakh, 46,000, 1640. Please be careful because you are having some figures in lakhs and some in normal. So just convert this into normal. I think 26 lakh, 36,875. This is the text. Now tell me, how much is the total income? Everybody tell me how much is the total income? 140 lakh, 1.4 crore. Okay, this is the total income. Look at your levels. Look at your levels. Is he in the second level? Rich person? Yes. More than 1 crore, where we see second level, more than 100 lakh, more than 100 lakh, up till 2 crore. Yes, he is 140 lakh. So he's here. Here we see just the total income 15%. Guys, till 15% we have no issues. Till first level, second level, we don't have any issues. Into 15%, your surcharge would be at rate of 15%, 395531, 39 lakh 55,000. No, 3,95,531, 30 lakh 32,406 plus 4% cess, 31 lakh 53,702. I'll round off 700. 3153700. Correct, Aditya. Everybody has done it or not? Everybody has done it. Now, my remaining two example, last thing of the day today, these are important. My remaining two examples are important. Last thing for the day today. Example. This person has house property income 20 lakh. This person has PGBP income 100 lakh. This person has capital gain 100 lakh, out of which 111A is 5 lakh, 112 is 2 lakh. It is 220 lakh. First of all, tell me everybody has written this or not. I need your attention in this example and next example. I need your attention here and next example. Okay. Yes, total income is 220. First of all, forget about surcharge. First of all, calculate your taxes. Surcharge is next level. Now, first of all, you have to get your taxes first. So forget about that in which level he is. Right now, our job, first step is to calculate the taxes. On 111A, 5 lakh at rate of 20%, 1 lakh. On 112, 2 lakh at rate of 12.5%, 25,000. And on remaining income, we don't have any special income now. Tell me what is the remaining income? 220 minus 7, 213 lakh. At slab rates, default regime we are doing. Guys, 5 seconds. I got it. How much? How much you got it? Is it 60 lakh, 80,000? Correct. Do the total. 62 lakh 5,000. Correct, Kishore. 62 lakh 5,000 plus surcharge. See, income is more than 2 crores. Income is more than 2 crores. Tell me in which level. Tell me in which level. In default regime, we have. Tell me in which level. 1, 2, 3. 25% level. Third level. Guys, is he in the third level? You have to check. You have to check. Please don't look at his total income. Now, I want your attention. For next 5 minutes, I need your attention. Total income is more than 2 crores. But please check. Guys, I want your attention here. See, this is my third level. Level 1, total income more than 50 lakh to 1 crore. In level 1, we were seeing just the total income. Correct? Nothing else is written over here. In level 2 also, we were seeing just your total income. 1 crore to 2 crores. That's it. But in level 3, guys, I have written something in red also. I have written something in red also. I have written more than 2 crore after excluding them. Excluding them. Correct, Aditya. Excluding them. So just see whether excluding them it is more than 2 crore, then yes. Then third level. After excluding them, after 111A, 112A, 112 dividend. Not casual, guys, not casual. These are stock market incomes. So after excluding them, if it is more than 2 crore, then yes, third level. Now check. Now check that my total income is 220, but I have to exclude 111A, 112A, 112 dividend. So my total income is 220. It says exclude 111A, 112A, 112 and dividend. Just exclude that and tell me how much it is. If it is more than 2 crores, then yes, we are in third level. Okay, exclude that. So we have 111A 5 lakh, 112A we don't have, 112 we have 2 lakh, dividend income we don't have. After excluding this also, I am getting 207 lakh. Yes, now it is exceeding. Yes, 213. Sorry, 213 I am getting. Now, yes. Yes, now after excluding that, it is exceeding 2 crores. Yes. And now if it is yes, apply 25%. Can I apply 25% on all? No, 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 no. 25% I have to apply, but not on all. Why? See in the note number 1, what is saying? That on stock market income, we should not give more than 15%. We can give either 10 or, but not more than 15 at least. Surcharge on 111A, 112A, 112 dividend cannot be more than 15%. So you cannot apply, 25% you will be applying it, but not on all. So how much is the surcharge here? See, on these two taxes, it would be 15%. And on this one, correct, Aditya, 60, 80, 25%. Surcharge would be in two parts. 25% on 60 lakh 80,000 and 15% on 1 lakh 25,000. This is 18750. This is 115 lakh 20,000. 153 8750 plus 6205 77, 43, 750 plus 4% cess. Understood? 80, 53, 500. Correct. Correct, Aditya. Done. Okay, last example for the day, which is important. Done now. Now, now, example. This person has PGB income 60 lakh, capital gains 300 lakh, triple 1A 210 lakh, 112 20 lakh, 112A 30 lakh. His total income is 360 lakh. So his total income is 360 lakh. Correct? Let us first calculate his taxes. Forget about surcharge. Calculate his taxes. On triple 1A 210 lakh at rate of 20%, 4 lakh, no, 42 lakh, 112 20 lakh at rate of 12.5%, 2 lakh 50,000, 112A 30 lakh minus 1.25 lakh into 12.5%, 359, 375, all okay, I believe. And on remaining income, how much is remaining? 360 minus this, minus 30, right? Not after, you should not exclude 1,20,000. That is an exemption while taking the taxes. 210 minus 20 minus 30. 100 lakh. 100 lakh slab rates. I think 26 lakh 90,000. Is it 74 lakh? Kirti, correct. Shagna, correct. It is 74 lakh 99,375. These are the taxes. 74, 99, 375. Everybody, first of all, done till here. Everybody done till here. Now, very good. Shagna, correct. Now, we see that in which level this person is. Some students will say, sir, it is more than 2 crore, third level. No. Third level says that your total income 360 minus triple 1A minus 112 minus 112A minus dividend. Tell me this. Whether this is more than 2 crore or not. So this is triple 1A, we have 210 lakh. 112 we have 20 lakh. 112A we have 30 lakh. If I subtract this, I get 100 lakh. Is it more than 2 crore? The answer is no. This should more be if this is more than 2 crore, then third level. If this is more than 2 crore, then it is third level. Now, after excluding that, Joseph, I excluded from the total income, I excluded that. And the third level says after excluding it, if it is more than 2 crores. No, in this case, after excluding it, it is more than 2 crores. After excluding this, no. So in this case, this note number 2 will apply. See, now the assessee is falling under any of these levels. Some people will say, sir, 100 lakh. So first level. No, 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 no. See, first level is just the total income. The total income is 390, right? In our case, the total income is 300 something. So it cannot be first level, second level. And it's also not third level. So this note number 2 says, if assessee does not fall in any level, then the surcharge is 15% for everything. On everything, the rate of surcharge would be 15%. So in this case, my assessee is not falling under any level. Understood now? Some students will say 100 lakhs are first level. No. First level say your total income. Your total income was already 300, more than 300 lakh, right? So how can you win first level? First level are normally rich assessee. He is quite an ultra rich assessee, correct? And why he is not in third level? Third level say more than 2 crore. Sir, we have more than 2 crore. But excluding na, see excluding, after excluding it. So he's not in under any level. Have you understood it or not? So here the surcharge would be at rate of 15% for all 15%. 11,24,906 or 5, whatever you want to make it. 6 also. 86,24,281 plus 4% cess. Then round off 200. Understood? Correct, Shagna. Aditya, correct. Got it now, Kirti? Correct. Everybody understood? Now, optional also same thing. See, in optional also it's same thing. Should I write the optional? I'll not write the example because it is same method. Should I write the slab rates of optional or you know it? Should I write? Do you want me to write? So in optional, guys, we have just one more level. Okay, just write. It will take 1 minute. I'm writing. Okay, let us. You will also able to revise also now. Surcharge in optional regime. See, in default regime, we have 3 levels. In optional regime, we have 4 levels. Total income, surcharge rate. First 2 levels are same. If total income is more than 50 lakh, up till 100 lakh, 10%. Second level is same. More than 100 lakh, this is lakh, right? More than 100 lakh to 200 lakh, that is 2 crores. It is 15%. See, first and second level in both the regimes is same. And up till here, see, up till 15%, these stock market players have no issues. But as soon as it goes above 15, then they have issues. Third, it says more than 2 crores up till 5 crores. If you are in more than 2 crores up till 5 crores, but it will say a very important thing, excluding 111A, 112, 112A dividend income. then 25%. And obviously on these 111A, 112, 112A dividend, it is maximum 15%. Same, those two uh, notes are same over here also. And fourth, more than 5 crore, excluding 111A, 112, 112A, and dividend, it is 37%. 37%. And those two notes are same here also. Understood? So guys, this was all about surcharge. It was so good teaching you all in the past 10 days. And I believe that you have thoroughly enjoyed it also, and you have learned a lot also in these last 10 days. Thank you once again so much. If you have any doubt, any queries you have, feel free to reach me. You can drop me WhatsApp message and whenever you feel like. Anywhere you stuck in your direct access, please do let me know. I would surely be helping you in that case. Bye bye and take care.